closed the week at or at 1066, excuse me. So again, we have this buy signal. We've got our long-term indicator. Predicted difference is starting to move higher. It's coming out of that oversold territory, again suggesting we could have a move coming back to the top side once we clear this other stuff. Now, I do want to point out we've closed at 1066. Last week at 5/26/2010 we closed at 1061, so we've been down in this area before. 1066.1 is not the lowest close we've had over the last several the last several trading sessions. 1061 is, so that's all these little things we want to pay attention to. Paying attention to detail like this will allow us to see if we can come up with a pattern. So again, the close at 1066, certainly not great, but maybe not as bad as what it actually looks. So we'll be watching some of the key levels on Monday. 1054, certainly an area to watch. Now, our predicted short term has turned over from positive to negative. Medium term is coming into the negative territory also, as is the long term. So again, we're going to experience some volatility, but again, the predicted true strength indicator from Vantage Point with that crossover and showing that the market is incredibly oversold right here, this is an early warning sign for us that when it starts moving lower, even if we do aggressively move lower into the 1040, 1045 area, it is, in my opinion, a buying opportunity. So keep that in the back of your mind, regardless of what the market analysts and everybody is saying. We do have a very powerful indicator here from Vantage Point that very seldomly is wrong. So again, we just want to remember that and keep that into consideration. We've got this crossover to the trigger here on the Vantage Point that took place right here. If we go up and look at the market shortly thereafter, the triple EMA made the cross also right here. So we dropped from the 1185 all the way down to 1140. So the predicted true strength indicator is a very powerful indicator. Now let's go in and have a quick look at gold. What's going on with gold and the correlation it has to the US dollar? We can see that it's moving up, but it's not moving up aggressively. I'll say that much. So we've got this trigger crossing over to the downside on the predicted true strength indicator, predicted MACD in oversold territory. So again, we have a very mixed signal on the gold contracts to start the week. Our long-term differences is remaining positive, as is the medium-term predicted differences. So let's go in and have a look at the daily report on that also, because again, the daily report can help us determine what a range is going to be, and we can see, like in this nice clean setup here with the neural index, the short, the medium, the long-term differences all on the same page, makes it easier for us to have a good look at the market here. So our short-term neural index is down, of course. The predicted short-term differences is down. The medium and the long-term difference is actually flat on gold. It's not giving a bias one way or the other than to say slightly it is in positive territory, so the bias is still slightly higher on gold, but the short term is clearly down. So again, we may have a buying opportunity on the gold contracts, watching this 1205.3 area to begin the week to see what we get. Now let's have a look at the major support and resistance levels. We've got 1205, 1211, and 1214 with the close of 1216. So the 18-day predicted moving average also kind of supporting that gold is going to continue to make its move higher. It's going to come back, test the 1205 area, and start moving up. So we'll be watching that one closely also. But gold very much still following the US dollar, but not quite as strong as what the US dollar is right now. So what we're looking for is to see if the gold is going to continue, and if the US dollar is going to break away from that and start moving lower, very much like what it did last year at this time, to point out. So going into some of our major currency pairs now, getting into the Forex pairs, US CAD, this thing has dipped down considerably. What we've got here, we talked about this 2 weeks ago and in last week's presentation. We have a significant amount of resistance here, guys, in this between 107.50 and this lone candlestick up here that went up into the 108.50. It was just that, a lone candlestick, and the market immediately retreated. So we've got this 107.50. We can see the extreme volatility on the Canadian pair here. We had an open of 104.04. We had a high of 106.26 and a low of 103.56. So we've had almost a 300 pip move on US Canada on Friday. Now, what I want to point out to everybody is that the jobs report from Canada was far better than the one, in my opinion, than in the US. So once the smoke clears from the equity sell-off and the non-farm payroll number, the US CAD pair, in my opinion, is probably going to start its descent back down. Now again, I'm using the predicted true strength indicator from Vantage Point, crossing over the trigger to the downside in heavily overbought territory. So this extension higher in US CAD could be a good selling opportunity. Now we want to make sure we have our stops above this 108.50 area, so any move higher in US CAD is worth, in my opinion, a sell based on what we see with the equities and with the crude oil contracts. So let's go in and have a look at the daily report to start the week on US CAD. We have 106.54, 104.44. The neural index is pointing up, so we know it's going to move up. Now the medium and long-term differences are not supporting the buy position. So between 106.54, and I'm going to allow for some volatility here and say 107 even, because we're going to have a very volatile start to begin the week. I would recommend that we still stay with the short side of this trade, because again, once all of this stuff blows over, the Eurozone, the equities, the commodities, the US CAD is probably going to start moving back down. Now if we get over this 108.50 area, if we can ever get over that hump, I would recommend immediately going long if that happens, because then we're probably going to break towards the 110 to 115 area. But again, we're going to have to see how the market progresses before we can get into that for sure. So for now, we stay with the short side. Now, moving into our next pair, we're looking at the British pound US dollar. This has been a good trade all week for us. We've been buying this. We've closed the week. The British pound has closed, the US dollar has closed the week at 144.62. But I want to point out that this pair has really held up well, respecting what's going on with the Euro US and some of the other US based currencies. The pound itself, to be honest, has held up very, very well. So my opinion is we still have some upside bias here. The predicted true strength indicator supports what I'm saying. The predicted MACD, bit of a mixed signal there. The predicted medium and long-term differences also supportive. We're staying above that 0